Welcome back to Trading 360. I'm Nicole Petalides. Time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman of bullseyeoption.com. Great to see you both on this Thursday. A lot of back and forth action. We've seen earnings season, Fed, jobs. Alan, what's on your mind? How are you feeling about the market?
Well, I think the psychology has shifted. Last week, everybody was very, very negative, and you could see we kind of stabilized and had a little firmness. There's still some gaps up above in the NASDAQ and the S&P that need to be filled. So we'll want to see how the markets react when and if that happens, and likely that should be the case with this bull run. But if you look at technology needed a little bit of a break. And in the big picture, the NASDAQ's been traded between 19,000 and 21,000. So a breakout of the range targets 23,000, which is 20% up above. And that's happened every time in market history. So I have to go with the flow.
So you're looking at Arkk today. Very interesting. It's down today about 3% or so.
Yep.
What are you thinking as tech overall has been pulling back? Is there opportunity here or what?
Yeah, and this is a stock that has its own story. I mean, ETF, obviously, it has its own story. But I think, we talked about, the pessimism sometimes has been overhanging this. And if you look at it as a trade, it's been trading sideways between 45 and 50 since April 1st, where it had a breakdown. A breakout of this current range between 45 and 50 sends it to 55. 45 is important because it's the 200-day moving average. Here is a super support point to lean on. Now, this has been down 13% year to date versus tech up 15%. And over the last 2 years, it's unchanged. So it's got a lot of value in the fact that the NASDAQ is up 50% over that time period. I'm looking at a December option, a December 40 call. Again, that's that support point. Trading around 8, has 5 months for development, and I like the way that it stands with this kind of negative sentiment right now.
All right. What do you think here, Ben, when you take a look at the charts, please?
Yeah, I think it's a stock that's been coming under, an ETF that's been coming under pressure for some time now. Alan mentioned it's been somewhat range bound, but I think that feeds into some of the bearishness right now. Alan was talking about 45, I think was the level he mentioned. I've got my eye more like on the $40 level. Let me show you why in just a minute. But first and foremost, as we dive into the charts, you can see not a lot of conviction on the 5-minute candles. Here we're looking at some of the price activity we've seen since the end of last week. Upper extreme 46.5, we'll call it. Lower extreme around 44. And just want to stress the fact that we're hanging out on this lower extreme, right? With the broader market selling off here, not a lot of rejection of this lower level as I like to think of it. But so not only do we have the upper extreme and the lower extreme established here, but you also have kind of this middle area right around 45.50. And again, not a lot of information as you're just looking at the 5-minute candle chart, but step back with me and you're going to see what happens as we add a little bit of time on. And again, just kind of focusing on the middle of these areas of ranges that establish themselves, because here now we can determine that they're moving lower, right? We had one establish itself around 49, around 47, and then again mentioned right around 45.50. And then you can also see in between these areas, you get these big red candles where the market is seeking value lower. And that's what these consolidation areas are. Basically value establishing itself lower and lower levels. And look what's happening. It actually looks like we're trying to break out right now in a vertical fashion here through and to this $44 level. So let's keep an eye on this throughout the day today, especially again with that broader market weakness. One more step back. Let me show you. It's not just on the hourly candle chart where you see value stacking up at lower and lower levels here on the daily. Now, this is why I said the $40 level is key, because Alan mentioned the range we've been in since April. Well, we've been in a range going all the way back to looking since like middle of 2022. And the $40 level is the middle of, again, the upper extreme, the lower extreme established here. And simply put, this is a ETF that, as I mentioned, has been trending lower. Values establishing itself at lower and lower levels, and no rejection of the range we're in right now. Take out 40. That's why I said it was key. You'd open up a door for a retest from the lows from the fall of last year.
Okay. And, when I was looking at some of the top holdings, I know they're always changing and such. So Tesla, Roku, Coinbase, Roblox, and Block among some of the top holdings there in the Arkk Innovation Fund. Archer Daniels Midland is the next one. When you think of this stock, you see it down. It's down, 1 month, 3 months, year to date, 1 year down 28%. What's going on here, and where is the opportunity, Alan?
Well, the theme of today is finding stocks that have been trading sideways and trying to form a base to have a push higher. Obviously, we're in an everything bull market. So it's about risk reward and finding stocks that maybe haven't performed. So this stock's down 15% year to date. It's also down 25% in the last year. But we have seen what I would like to say technically is some of the worst, where it got buried, then we've recovered, we've stabilized, and then we've traded sideways, is what you want to see to make a bottom. We've been between 55 and 65 for 4 months. 60 is an important midpoint. We popped above that. So we should move up to the range top at 65, and then a breakout of that target 75. There's a gap at 67. So what I'm looking at is a December option again, plenty of time, 5 months. The December 55 call, the bottom of that range. We are 20% off that January low. So we have built a solid bottom base. We just now need an upside breakout to get this on the move.
All right, and we'll see if we can get that so we could have a bullish move. Let's see what Ben has to say about the chart, please, Ben.
I would absolutely agree, Nicole. We were trying to establish a bit of a base, but still have yet to get that upside breakout. So we're in a trend environment to the downside still, not what the bears wanted to see in terms of this bit of relief rally, but it doesn't necessarily invalidate the working assumption that value continues to establish itself at lower and lower levels on the daily candle charts, which we'll get into in just a second. But first and foremost, starting it off with a look again at some intraday price activity and actually a bullish pattern playing out in shares of ADM on the 1-minute candle chart. You can see a nice move up, high conviction on the left side of your screen, and then sideways consolidation that's ensued since. Again, just establishing value and an area that the market's found comfort around, right? Rotational, not a lot of conviction, horizontal, and very random. But 62 is a key area we're watching because it's the middle of the range that we've been in. Lower extreme, well, we're on it right now. Upper extreme, we'll call it 63.20, 63. But yeah, again, testing lower extreme, but a bit of a bullish pattern here. Let's step back away from the 1-minute candle chart. And even in this hourly, you're going to see, as Alan mentioned, a stock that's trying to bottom out, a stock that's actually establishing on a 60-minute time frame value at higher levels, right? Not what the bulls wanted to see. When we were balancing around 54 back in March, they wanted us to take out those lows, establish a new area of value at a lower level, but instead, look at this. We rallied up, sideways consolidation, building balance here again around the $61 level. What's impressive here is step back for a second. I want to show you something as we look at this high conviction sideways consolidation, this pattern. Look how it kind of repeats itself a couple times along the way up. So really solidifying that as a breakout point and a lot of energy associated with it, simply put. Now, this move here, somewhat counter trend because as I mentioned, we had been on the longer term daily candle chart trending lower, value establishing itself at lower and lower levels. But when we bottomed out at 50.72, well, that's when things started to turn around a little bit here. So you can see again, as I mentioned, 55 being that area that we started to rotate around. And then look at this. We rally up. That's the move we just looked at. Still have yet to take out 78. That's key. We're into the gap Alan mentioned. But again, still has yet to pop and get anything that really is establishing that now we're starting to take out areas that were established on the way up. All that's happening right now is we're kind of building maybe a larger area balance. That 55 is kind of somewhat of a narrow range right there. So it wouldn't surprise me to see this bearish pattern, longer term chart still continue to play out here and to see ADM remain under pressure for some time now.
All right. And let's get the final thought from Alan on that one.
Well, the thought is there's a gap up above, and, I like what I see in this chart, this bottom base, and the longer that you form a base, the more significant it is. And so I'm a guy that positions for a breakout. I don't consider myself a trader. I consider myself a positioner. I position for success. And so I'm positioning for a breakout. And when that occurs, then those options are going to produce significant gains. And I've limited risk being, $6 in the money using these deep in the money options.
All right. Next up is PayPal. And this is a different chart because if you look 1 month, 3 month, year to date, 1 year, it's a winner. All across the board. So it's at 66.25. Some of your thoughts here.
Well, my thought is this one has broken out, but it still has a lot of upside because it's still within a wide, it had been in a wide range, a $10 range in 2024 between 55 and 65. So that projects 75. So we've seen a breakout. And this stock has disappointed so many people for so long. And it has a PE of 15. So it does have amazing value compared to the rest of the market. So we're also seeing the money flow, the cash money, the smart money flow that I watch to see someone accumulating long leverage positions here. So that's following the money there. I'm looking at an October option, October 60 call. That's the midpoint of this range, 55 to 65. So that should be a support straight around 875. So the break even on this is, maybe $2 higher. It's got 3 months of time. It's got a little bit less time than the others for development, but this one's already started its move with 75 as its near-term target.
All right, let's see what Ben has to say about this one. Where do you think it's headed, Ben, when you take a look at this chart?
Yeah, Alan mentioned that it has had a recent breakout. I would agree with that. The recent move that we've seen above 64 was significant, but he also mentioned how it's disappointed. And when we look at the longer-term chart, you're going to see a clear example of that. This was one that was trading up around 310, if you remember, back in 2021. And so to see it holding this lower level, I think it is still disappointing investors, not necessarily that it has. Taking a look here, though, a bit of a bullish pattern. We've got a 5-minute candle chart queued up, 3 areas of value that have moved higher. So again, trying to get something going here. Big move up through 64 was important. Currently bouncing around 66. Step back with me. I'm going to show you what's going on with the hourly candle chart. Simply put, not a lot of conviction one way or the other. We look for that really well-defined staircase type pattern. You can see, if anything, we're kind of establishing a bit of a bottom right here. And the move through 64, again, I'm going to point to the significance of in a second. But the one thing I would argue is we still have yet to take out those June highs. Interesting, though, to see strength in shares of PayPal amidst that broader market weakness that's been playing out, right, over the last, few weeks or so. Let's take a look. Step away from the hourly with me all the way into a daily, and this is where, again, I'm talking about the disappointment. I mentioned 310. That was back in the summer of 2021, and just value forming at lower and lower levels since. Here's that 64 significance. It's the middle of a range that we've been in going all the way back to last summer, basically this time last year. But until we get above 80, Nicole, it still looks to me like the bears are in control. Yeah, you could see some random price activity within this range that provides opportunity for the bulls, but it's pretty easily identifiable that this longer-term trend is still down.
All right. Thank you for that. Alan, we'll give you the last word today.
Well, the last word on that one is we get up to the breakout to that 75 level, then this option almost doubles in value. So that's the game I play, is that it's about probability. It's about using, deep in the money, limited risk options that are going to perform better than the stock from a payoff standpoint. A modest move and then underlying produces big gains, big gains, triple-digit gains in the right option.
All right. Alan Nuckman, bullseyeoption.com. Ben Lichtenstein, thank you both very, very